All right, it looks like we are live, Tyleek. So I'm gonna pull it up
Alrighty.
just to make sure. I'm gonna pull it up. Hey, everybody that's coming in.
Hey.
We just want to make sure because
That it's
y'all know
showing up.
how this. They know how this is. Technology is great when it works. So
And a
I'm just gonna
pain
pull
if
it up.
it doesn't work.
Yeah, I'm gonna pull it up on my side just to make sure.
I was gonna pull it up too just to see.
Oh yeah,
We
we're
up.
on. We
All
up.
right.
Yeah, we're up. Perfect. So, good morning, everybody. This is David Totten, EXP Realty of Virginia, North Carolina, and welcome to the channel. Our goal is to make sure that we help you make a smooth move to Danville, Virginia, whether you're buying or selling, relocating to this area or over in North Carolina. I have my esteemed guest, partner, friend, best
Yes.
lender in Virginia on the East Coast. I'm gonna say on the East Coast, Tyleek.
Listen.
Uh,
Can't
Tyleek
argue
Brandon
that.
with Alcova Mortgage. I have seen her work miracles before. So Tyleek, welcome again. This is, I think, our second time actually doing
Yep.
um, a live, broadcast. So,
Mm-hmm.
welcome again. This is the keys to your future home buyers workshop, and we just want to just go in on what it takes to win in real estate with this crazy market.
Yeah.
So go ahead, Tyler, introduce yourself. Tell the people who you are, where you're from, how they can contact you, and then we'll do it again at the end.
Okay. Well, I am Tyleek Brandon. I am from South Boston, Virginia. You can at tbrandon@alcova.com or at my number 434-713-8607. Um, get to know a little bit more about me. Well, like I said, I'm from the area. Well, I'm not from Danville, but I'm from South Boston. So all the same, because what is it, a 30-minute drive? Um, but I definitely enjoy working here, seeing the different things they're bringing to the area, seeing how the area is advancing. Both, Virginia and North Carolina, seeing so many people move. And we've worked with people from California, Florida, Wyoming, like everywhere that are coming to the state. So, we definitely have a lot to offer, and we will talk in more detail about everything throughout the class today.
Awesome. So just to get into it, I kind of wanted to start really with kind of where the market is today.
Mm-hmm.
Um, so that's the current state. So interest rates, homes sold this quarter,
Mm-hmm.
employment, and then kind of like talking about the inventory shortage that's
Yeah.
across the US. So
Yeah.
as far as interest rates, I did some research, but with
Oh,
you with that being your wheelhouse.
and this is what I do every day. And I look at these rates every day. And actually, it's so funny because I was actually on a live and did a class with two realtors a few weeks ago. And I broke the news to them that, everybody was saying 7%, 7%, 7%. And I broke the news to them that there are people getting 8% rates. And this was a few weeks back. And that was shocking and like beginning of the curve for them because they weren't aware of that and nobody had told them about that just yet. But of course, depending on where you are, right now interest rates are in the eights. They are in the eights. We have broken the eights.
Woo.
Um, what were you about to say?
No, I just said woo.
Yeah, yeah. So I will say that we still do have strategies and programs that we have to try to help people get discounted rates. And at this rate, most lenders are having to lean on down payment assistance, right? Because down
Right.
payment assistance is giving clients rates a whole percentage lower than what the average is, right? So we're
Right.
still able to get people into their homes with we have one closing next week. We were able to lock her in the sixes,
We
6.75.
yeah, we did. Say that,
And
matter of
that
fact,
was,
say that again. Where did
and
we get
listen,
them at?
a 6.75, and rates were already at near 8 at that time,
Right.
utilizing the programs that are available. So just because the national rates are at that, we are still looking at ways to get people into homes at an affordable rate, at an affordable cost. So there are still programs out there. So don't get discouraged if you hear 8%. That is just where we are. But I will also say, still at 8%, still at 7%, we are getting people into homes with lower payments than market rents, right? So
Right.
a lot of people worry about the 7 to 8%, and the interest rates, right? But if you can get approved for a good amount right now and you find your perfect house, you can end up with a payment much lower than what you're thinking. And then when it comes time to refinance, and then we slash that payment by $200-300, then you're really comfortable, right? Because you're already comfortable with the payment now. And all it'll do is get better once you refinance it. And let's say we can get down to the fours or the fives again. That would be super beneficial for people who are buying right now. So everybody who's buying right now already has that plan to refinance. And all they have to do at this point is make all of their payments on time, over the time, as we wait for rates to drop, and just stay a good candidate to borrow money, right? And I tell people all the time, refinance is only good if you're still a good candidate to borrow money at the time where rates are good. So don't let late payments hit your credit. Don't let collections hit your credit, because those things will impact your ability to borrow again. So just stay a good borrower, and you'll be, in a very good, very comfortable place, once you buy your house.
Awesome. So thank you for sharing that, because I know we have some people that are on the fence right now, right?
Mm-hmm.
Who are worried about, which I would say is a justified concern as far as
Mm-hmm.
rates, right? Because something I read that the National Association of Home Builders put out was that interest rates are at an all-time, what they say, at a 23-year high.
Mm-hmm.
And the mortgage application activity is down to its lowest level since 1996.
Mm-hmm.
But like you said, just because that's nationally, that's what's happening. Y'all have programs available who can
Yeah.
help people get in at a lower rate. And the thing is, what I've heard many professionals say is that you marry the home and you date the rate. And I think
Yeah.
we said that before,
Yeah.
because I know where they are now.
Mm-hmm.
And I was watching another friend of mine do a video a few days ago. Do you think rates are going to ease a little bit in your a professional opinion right now?
Well, that's what they announced when the Fed had the meeting, is that they plan to drop rates, but they announced that they plan to drop them down slowly,
Right,
right? So
right,
some people are thinking that let's wait 12 months and we're going to see like a drastic change, and that may not be the case. And I also told people, right? Cuz we were all thinking that by the end of this year, like at this time, their rates were going to be significantly better. Like last year, we were already like, oh, rates are going to drop next year, because that was the talk of the town. That was what was buzzing in the mortgage industry. And at the end of the day, we don't know what will happen. Like, we can put out our best opinion based off what the Fed says, but you know how it is. They can change their mind and everything can go a completely different direction. If you're not careful, if you're not aware of how things will go. So even though mortgage professionals, even though we say it's going to pull back, you know, we don't know how the economy is going to react.
right,
So that's
right.
the thing. Like imagine the people who wanted to buy last year, and then they were like, well, let me wait 12 months. The rates are going to fall back down to 2 and 3% or 4%. And now we're in a place where we are at 8%. And they probably should have bought when it was 5, because now we are pushing, like, you want a 5%, you want a 4%. Like, people dream of having that. I remember
Right.
last what at the beginning of the year, people were complaining about 6%. Dang, 6% is high. Like, and here we are
Yeah.
dreaming about locking in a 6% right now. So, professional opinion based off of what the Fed has discussed, they do plan to bring it down, but they do plan to bring it down slowly. So we'll probably, go into the 7.5s from the 8, break down from the 7.5 to a 7, and like slowly come down. I'll
Mhm.
say like last week, well, week before last, it was like a random dip in rates, and they were really, really good. So, if you were shopping and you found a house and you were under contract, those numbers were like pristine. Those were ideal. But you never know. It's a temperature test, and
Right.
you can't really gauge exactly how things are going to go. All you can do is just pray for the best. And try your best to get your clients, the best rate possible at that time. Because if you wait, it might turn out, on the negative side for you. It
Yeah.
might not go how you want it to be.
Because you can't time the market.
No,
You
you
can't
can't.
time the rates because I went back 3 years.
Mm-hmm.
So on this date in 2020, interest rates were 3.04%.
Mm-hmm.
Fast forward a year, 2021 rates were 3.27%.
Mm-hmm.
2022 rates jumped up to 7.32%.
Mm-hmm.
And now you're saying we're at 8 and above. So
Yeah.
here's what I want to tell the people. If you are on the fence,
Mm-hmm.
get off
Yeah.
and let Tyleek help you
Yeah.
because she has ways and she has means to
And
help you with your rate. Because, like she said, um, Jerome Powell did announce that, he thought where we are now, as far as the economy and inflation is concerned, that they could possibly not raise rates again, right?
mm-hmm.
And then some of the other Federal Reserve leaders said they think we're at a place to where rates shouldn't have to go up anymore.
Yeah.
But that's just, I mean, that's speculation. We don't
Yeah.
know. We don't know
That's
what
speculation.
what job numbers are going to do. I know last month
Mm-hmm.
the U.S. added 336,000 jobs in September,
Mm-hmm.
which the average is 267,000 a month over the last 12
Mm-hmm.
months. So with the economy still booming,
Yeah.
people are still spending money. We
Yeah.
just don't know.
Oh, these houses are still flying off the shelves. We've seen it slow down like a little bit in our area, but at this rate, if people are going to spend the money, they're selective about what they're going to spend it on, right? So if you're listing a
Exactly.
property on the market, these people are going to chew that property apart. If you want
Exactly.
that money for that house, oh yeah, they're going to chew that property apart if they're going to spend their money for it. So you still are seeing properties on the market less than 2 days,
Absolutely.
and they're
Absolutely.
flying off the shelves. People are still buying, even though, because the thing is, I was telling everybody, like when we bought in our winter time when it was like 5% rates, right? And everybody on the news was like, listen, don't buy, don't buy, don't buy. Rates are gonna drop, everything's gonna drop. And same thing when rates were 2 and 3%, they were telling people not to buy. So at the end of
Yeah.
the day, I don't think I've seen any time in the national news where they're going to encourage you to buy a property. I think it's a lot of fear mongering. I think I
Yep.
tell people all the time, with a mortgage, I feel like you have way more leniency than renting. And the reason I say that is what? Mortgages, you had a whole first 15 days of the month to make your payment. When you're renting, it's due on the 1st or the 5th, and you pay anything after that, they're ready to kick you out. They're
Yep.
ready to get your things out of your place, put it on the sidewalk, and get a new tenant in. You have a lot more leniency with a mortgage. If you do pay a little bit later, you have a late fee. You just never want it to get to be 30 days late, because then it goes on your credit and it reports as a late payment. But you have a lot more leniency with the mortgage, and you're able to pull equity out of that house as you gain equity, and you're able to really leverage your property as an asset. So definitely it's worth it. And like I tell everybody, you pay once you get in the house, you make a payment every month, just like when you're renting. And it's simple. It's not as complicated as I think a lot of people try to make it out to be.
Now, you don't gain equity paying rent, do you?
No, you don't. And I've never seen where you can get a chance, like you refinance and you can slash your payments by $200-300, maybe $400. I've never seen where somebody could slash their rent, right? So at this rate, rent just continuously climbs up. You had that little bit of assistance or leeway during the time of COVID when people were out of work, but after that, they shot those rent prices up. And at the end of the day, we are still closing on homes and getting people into homes below market rents. And one thing about this area that I tell everybody, it is one of the only places left where you can buy a house under 200,000, where you can get somebody into a house for $100,000. At the end of the day, y'all, the more they add to this area, the more the prices are going to go up, right? So if you're trying to rate watch, you might sit there and rate watch yourself out of affordability, because as you're sitting here watching these rates, these home prices are steady climbing. And we don't see, especially not in this area with everything they're trying to add, we don't see in the foreseeable future where they will stop. Or why would they stop? They're adding to the community. They're adding jobs to the community. They're adding things to do. And at that point, the home prices are still going to go up, whether you buy or you don't. And as people buy right now, one benefit that they have is equity. So they're going to live in their house, even though they have a higher rate right now before they refinance. They're going to live in their house and they're gaining equity as they live in their house. Like a lot of the closings I've done in the last couple of weeks and are going to close on toward the end of the month, these appraisals came back with $10,000-15,000 worth of equity already. $20,000 worth of equity already in the house. And they haven't even lived in the house yet. So imagine them sitting on it until it's time to refinance. They could have $30,000-40,000 available equity, maybe even 50 by the time refinance even comes. And then you can leverage that equity however you want to do it. Whether you want to fix up your house, whether you want to pay off debt, you want to pay your kids' college tuition, whatever you want to do, that is your money to use at that point. And people who buy right now, they are gaining that. So if you wait, you do lose out on potential equity because those home prices are going to continue to climb. So yes, you will get a lower rate, but you are also purchasing these homes at top value and losing out on that equity portion of it.
Which is, I'm glad you said that, because that's the perfect segue into like the inventory shortage and what's happening here locally.
Yeah.
I know that by spring next year, this area is supposed to add some 3,900 jobs to the economy, right?
Yeah.
Now, nationally, the home price for a new home is like the mid 400,000s, right? Now, here you said this is the only place, almost one of the only places left where you can buy a home under 200.
Yeah.
Your average family, according to national numbers, can't afford a $250,000 house just because of affordability. So another report I was looking at, 64.8 million households are unable to afford a $250,000 house.
Right.
And we're under that. So this is the perfect place, the perfect time to get in the market to buy a home, because as Ms. Talik stated, home values are going to continue to climb. And if you don't get in now, who knows when you'll be able to get in. Even if, let's just say, rates do go down, right? But the average price to buy a home is $400,000.
Then what is 2% gonna do for you at that point? You know what I'm saying? That ain't gonna do much of nothing for you if you can't find anything nice, in a great neighborhood, in an affordable area. So that's why, I always preach right now, we gotta secure your living area, right? Because one thing about it, those numbers that you have, right, are, you're saying like 60 something percent can't afford a $250,000 house, but that does not mean they're not making a $250,000 house payment in their rent.
Right.
We're talking about what they can or can't afford. That doesn't mean the landlord is not charging it.
Right.
So at the end of the day, you got to do what you can do to protect your family and secure your living space. Because at the end of the day, these prices and stuff, in these different areas are going up. So if you can still, I mean, I closed on a $90,000 house last month. So yeah, rates might be 7, 8%, but that payment was nothing. And then let that client refinance later. What is that payment? 600, $600 a month for a newly renovated house at 90,000. So at
Yep.
that rate, we're not hitting people over the head, even though rates are higher. We just have to find something that is the perfect match for you. And I'll tell people if they're shopping right now in this market and they really, really, really want to buy a house, maybe let's go with a lower budget, right? Let's start
Right.
at a lower price range. Let's get you something that you can go into. Because I tell everybody, regardless of what price range you go with your house, even if you feel like it's the perfect home, you're going to go in there and make changes to make that home yours. So you can do the same thing with whatever house you buy. You got to understand, if you're not willing to make changes to the house, the less you want to do to it, the more perfect you want the home to be, the more you spending per month.
Yep.
But you can take a cut to that mortgage that you might potentially be paying if you go into a house and you see, okay, this has everything I need, base level. Like they have taken care of the HVAC, they've taken care of the floors, the roof. All of these big ticket items have been well taken care of. Okay, I don't like the paint, but that's nothing. We can go in and we can paint this ourselves. We can go in and we can change these appliances out. We can paint the cabinets. We can do this, that, and the third, because you're going to do it anyway as you live there. You're not
Yep.
going to keep your house the same, but these are different things. And I know I hear a lot of people on social media talking about like the wood paneling in houses, like they can't stand wood panels, right?
Right.
And it really does not cost that much to change and get rid of wood paneling in the house.
Now, what I'm seeing in a lot of these houses that have wood paneling is you paint it,
You paint it
and it
white,
gives you a
man. It
whole
looks
nother finish.
so good. It looks so good if you paint it white.
Yeah, you paint it or you put drywall up. But that's the thing.
Yeah.
You spend a few $1,000s to
Mm-hmm.
get a several $1,000 return, right?
Uh-huh. Because that
Increase
return
the
on
value.
investment, and one thing for people who already own a home who may be watching, keep receipts for everything you do in that house.
Right.
Everything you do in that house, keep a receipt for it, right? Because when
Right.
it's time to sell, we want to see what is the reason for this big jump in price, especially if it's like a quick turnaround time, like a flip. What's the reason for this big jump in price? What exactly did you do to this house? Sometimes you have to show that proof to an appraiser, maybe, of how you have turned the property around and why you feel like your property is worth this, that, and the third. So always keep those receipts. But like you said, a few $1,000s to make these updates in the house, and you're also getting a cut, right? If you're
Right.
willing to buy something and put some work into it, you're already getting a discount to your mortgage. It's less competition on the property. So more than likely, you might offer less on the property and still get it accepted. And then you have a lower mortgage, and all you got to do is live in it, have that low mortgage rate, and do what you already were going to do anyway, which is make it better, make it look better, add value to it. And then, affordability wise, that's where you'll be.
Mhm.
But you can't
Right.
have a low budget, but wanting like luxury housing and luxury
Right.
marble, granite. You want all of that, but then we are literally like on a tight budget. You got to, it's a give and take with it, essentially.
Right. Right. So there you have it. Just drop some gems. So please pick those up. I put keep your receipts in the chat anyway, because it does help. Because people are gonna ask, right?
Yeah.
You walk into a home
Yeah.
and they on Zillow and they see the house sold for $100,000
Mhm.
3 months ago,
Mhm.
right? Then it's relisted on the market for $200,000.
Mhm.
And they said, well, where did they do $100,000 worth of work?
Right.
So just remember that. All right, so Talib, we got a question since we're gonna do it like this. What
Okay.
is what is the and this is from I don't know who it is. What is the lowest mortgage rate you can finance?
What's the lowest mortgage? Are you talking about like
What's
lowest
the
amount?
Yeah, what's the lowest mortgage you can finance? That's the question.
So it depends on the company.
Okay.
We go down to $50,000. We will
50.
finance down to $50,000. In some circumstances, depending on the program, we might go a little bit lower. But then you gotta think about it, like the fees and points test. We have all of these like different systems in the background where like the lower amount you finance, sometimes we can trigger these different things to go off. So yeah, I'll say baseline. Most companies are at about 50,000. And then honestly, if you want to get something under 50,000, just get like a personal loan for that, to be honest. Like you don't need a mortgage loan for 10,000 or 20,000 or something like that.
Whoever sent that question, thank you for it. It just has me, but 50,000, depending on the company, is the lowest that can be financed. Which leads us into Miss Talik. Where do you? Let's just say I'm a new buyer,
Mm-hmm.
brand new buyer. I'm green, and I don't know where to start. As far as credit is concerned,
Okay.
what are those? What are those qualifications as far as credit? And then we'll get into what it takes to qualify for a
Okay.
mortgage.
So I always think this is a tricky question, right? Because yes, we will lend down to a 580, right? 580 for FHA VA. But I would say if you need assistance, you got to come to me with more than a 580, right? Because when you go down to a 580, you have to be comfortable with bringing money to the table. Like you can't want down payment assistance and all these other things layered on top of your loan at a 580. So I don't recommend people buy at a 580 unless they have sufficient savings. My branch has been able to get plenty of people into homes at that 580 mark. But we don't really recommend that. Unless you're going VA, which is 100% financing. That is an option where you can kind of get some level of assistance by not having that down payment. But closing costs are still there for VA. So 580 baseline is where you have to be to at least get a home loan. But particularly, we do have company overlays for people under a 600 where we do require you to have reserves in your account. And that's just a safety mechanism for us and our company as we're lending out this money to you. We do require you have 2 months of your mortgage payment in reserves. Which should not be a small fee, if you are trying to buy at that low of a score. But that's a requirement that is eliminated if you have a 600. So I always tell people, like, if you really got to get into a house, try to be at a 600 at least, right? Because then you get rid of those additional overlays of money that you have to have, and reserves have to be there after you close. So this is money where after you've come to the closing table with whatever the amount that you're spending, this needs to still be in your account, that amount for reserves. So they want you to at least have that in savings. So you get rid of that once you get to 600.
Okay.
600 is okay, and I've done plenty of loans at 600. I've been able to go like USDA or utilize VA, something like that, during that time, and still not have that down payment, and then negotiate closing costs to try to get people into their home with as little out of pocket as possible with 600. But I tell most people, like, the most success I see is at 620, right? Because 620 is like, will open you up to every single program. The lowest that conventional goes is 620. Virginia down payment assistance is 620. For you to get the grant or the second mortgage financing is the minimum is 620. So it really opens me up and allows me to do more for you and open you up to more programs when you are above that 620 range. And I'll say VHDA really gives out like the same rates for people at 620. Like you get the same rate sheet. The cost might be a little bit different, but you get the same rate sheet for everybody, whether you have an 810 or a 620. So at that point, we've seen a lot of success getting people with lower scores into houses utilizing those programs. So I'll say if you cannot physically save up what you need to purchase a house or what you think you might need to purchase a house, then you have to work on that credit aspect so we can open you up to getting assistance or getting, better programs without so many stipulations laid on top.
Perfect. I love it. Thank you. I think we're about to get another question to come in, but we want to be at least at a 620 to get the additional perks and the additional benefits and assistance.
Right.
Now, when it comes to qualifying for a mortgage,
Mm-hmm.
what are those steps? What do you require people
Mm-hmm.
to have to be able to get that pre-approval so they can
Right.
come to me and then we go shopping?
Right. So we already talked about credit. Credit is one of the biggest things we look at, right? Um, Credit is that open and shut type of thing. It's either you have it or you don't, and either we can go forward or maybe we got to get it to credit repair. So of course credit, and then income, right? And a lot of people miss that. Like a lot of people do not correlate that your credit score is not going to get you this loan. Your income and your debt to income ratio. So your income and your debts, that is what qualifies you for what you can purchase. Your credit at that point, what I'm saying, that's kind of out the window. We got to have some income there. So I have seen where, you have a lot of older people who are looking to buy, and they are on a strict, tight set income with Social Security, disability, pension, something like that. And if you are not making enough with that, if you're making $1,000, $1,500 with Social Security, disability, pension, but then like the average mortgage here is already $1,000, $1,000 to $1,500, that's your whole check. So even if you come to me with an 810, we got to make sure all of these things balance out in order to get you pre-approved. So, credit is what most people think is going to get them in the door, open and shut. Like, I have an 800, I can get a house. And that's not necessarily the case, because if you do not have the income to pay that money back, then we can't qualify you. Or like, yeah, you got the credit, but I mean, I can't get you approved for anything to really buy a house in this market. So all of those things have to balance: your credit, your income, and then your debts, right? And I'll say debts are like the things that we can maneuver and play with the most, because we can have your credit cards paid off by closing. We can go ahead and mark a credit card off or a financial obligation off if you are going to handle that before closing and get you approved for more money. If with all of your debt you feel like you don't like your pre-approval amount, we can really kind of maneuver with those debts, right? Because at that point, debts, all they have to do is be paid off, or at least installment loans, if they're paid to 10 months or less, you don't have to count them. So it don't necessarily have to be paid to zero, but if we update your account and we see that it's less than 10 months of payments or 10 months or less payments, then we can kind of omit stuff like that. But the income is a really, really big factor that a lot of people do not think about when it comes to getting pre-approved.
Okay. All right. So we had another question come in. This is
Okay.
going to be a good one, I think. I'm going to put it on the screen. Can you see those when they come up?
Yeah, which credit score is the most important?
Yes.
Are you talking about between the different bureaus, or are you talking about, because this is a loaded question, right? Because are we
It
talking
is.
about TransUnion, Experian, Equifax? Because they're all equally important, right?
Right.
Because we look at all three. And what we do is we take your median score. So we get rid of your highest score, we get rid of your lowest score, and we keep the one in the middle. So all of them are important. I haven't seen where consistently like Experian is the one I use, or TransUnion or Equifax. It depends on how the cards fall with these different bureaus, which one of which one of them is your median score and the deciding factor for you. But if you're talking about which of the scores I listed earlier, would be the most important, I would say at least come to me with a 620, please. Because that helps you get the programs you need or the assistance you need or whatever help that you need. If you can come to me with at least that, I can work with something. But when you're under that, that already limits you. You're walking in the door, either you're going FHA or you're a veteran and you're going VA, you're limited already. Or you have these additional stipulations on top of it. So for that, I would say at least come with a 620. Like a lot of people think you have to have an 800 to buy a house, and that is not true. I'll say probably 95% of my closings this year have been in the 600s. Like I see a 700 credit score, like I say, maybe once every other month. I really don't see people in high sevens and eights. I mean, I have seen it, but it's like that is not the normal, right? So I don't want people who are at a 650, 660 to be like, I'm going to wait until I have an 800, because who knows when you're going to meet that mark, and also where our home price is going to be by the time you get there. Because another thing that people don't realize is that you got to buy at the right time, right? So imagine the people who bought at 600 during COVID. Your credit score was 600, but you had a 2%, 3% rate, and you had a 600. You're doing better than people with a 610 right now. Well, I mean, an 810 right now, 820 right now. When you have a 600 and you're getting better than somebody at an 810, you got to think about it. It's about making sure you're utilizing the opportunity to buy when it's best to buy. Because even at the worst, you could have a 580 and close with a 4% rate, during that time. So, I say always jump on it when you can. So don't try to chase these. Like, of course, try to come with the best credit score you can. But if you don't have 800, you're still okay. If you don't have a 700, you're still okay. If you feel like everything else checks out, but you don't have that 700, let's go ahead and get the ball rolling, because, we can still get you into something and we can get great terms for you. So, like, think about all those people who are nowhere near a 7 or 800 who have like ideal mortgages for pristine homes, mortgage rates for pristine homes, because they bought at the perfect opportunity to do so. They didn't wait until they had an 800 to do so.
Right. Now, another question came in. So you deal with the credit reporting agencies individually, but what about? Okay, so I think this question is related to what about your FICO score versus the Vantage score? What people get from Credit Karma and all.
So we work with FICO scores. FICO scores are the most important for any major purchase you're going to have, right? So there's like auto FICO when you're going to buy your car, and we have mortgage scores, which are the regular FICO. So we look at FICO 2, FICO 4, and FICO 5, which is TransUnion, Experian, and Equifax, right? Those are your mortgage scores right there. If you're using Credit Karma, I tell people all the time, I don't like when people say that Credit Karma is wrong, because it's not wrong for what it is, but you should not be using that to monitor your credit for a major purchase. Like, they are, from my experience of what I have pulled, the difference between Credit Karma can go as high as 40 to 50 points, sometimes 70-point difference of what I pull versus what the client sees on their app for their scores, because they are just different models. Your score is categorized in different ways with these different models. So it's not wrong. Your Vantage score is this, but your FICO score is not anywhere near that. So I tell everybody the two places you should go if you really want to accurately know where your credit score is either myfico.com. You can get that app. It's a little bit more expensive, but that is going to give you like basically exactly where you're at. The other place is credit.com, and that is like my favorite because they have a 7-day free trial. So you can kind of log in there, do a 7-day free trial, and really see where your mortgage scores are. And I'm telling you, credit.com is accurate. Every time I've had somebody check credit.com before I pull it, I get the exact same thing. You just have to know and look for the right score. Because if you don't look at the right thing, then you are misguided, right? So you
Right.
see Credit Karma, you're in the 700s, but you're not looking at your FICO. So if I pull it, yes, you're still good. You know, you might be at a 680 or something. You're still good. But, you know, I have had plenty of people blindsided and just completely distraught because they're like, oh, I got a 700, I got a 750. And then when I pull it, it's like, it's not there, but it's still good. But, you know, when you set your mind and you think you're one place, and then when I pull it and I get something completely different,
Yep.
that is a shock. So you just want to make sure you're monitoring the right stuff. So FICO 5, 4, and 2. And don't do auto FICO because auto means car. So if you're trying to buy a house, we're not going off the car score because that ain't the same thing, right? So make sure you're looking at the straight up FICO 5, 4, and 2, credit.com and myfico.com.
So myfico.com and then credit.com comes with a 7-day free trial. Because yeah, people can pull their reports once a year, right?
Yeah, they get on nationally, the government does allow you to get your credit report once a year at annualcreditreport.com. So you can go in there and see a full layout of your actual credit report, but it does not have your score on it.
Right, because you got to pay to get the score.
Yeah, so I would just go on annualcreditreport.com and get my actual report. So see what's impacting my score, but then go on like credit.com and see what the actual score is. Because what are we doing? That's free 2 times.
Right.
You get to figure out where you're at. Now, I have a lot of people that do decide to keep credit.com because it's accurate. So you know, it's nothing but like 20 something a month. I think my FICO is like 30 for the lower package and like 40 something a month for the higher package. So I do tend to recommend credit.com a lot more affordability wise.
Okay. Awesome. So after we get through, you know, getting your credit straight, which you do have a company, if somebody watching they have the income, they have the savings, and this is what I hear a lot. I'm working on my credit.
Yeah.
And I tell them, well, I have somebody who can help with that, which is you, because you work with the company who can help with that. So can you like briefly go into what that program is like? Then we'll go into the buying process and give some additional little tips, and then we'll wrap up.
Okay. It's a loan readiness program, and they only actually work with like realtors and lenders to refer clients to them. So, you know, you would still have to talk to either one of us to be able to get referred into the program, but it's an overall loan readiness program. So they look at your credit, they look at your debt to income ratio as well. So they will allow you to go into that app and you will be able to do a soft pull on your credit every single month for free. With that program, they are able to get amazing deletions. So like they've been able to delete collections. They've been able to delete a lot of major things off of my client's credit. And I have seen wonders, right? So I've seen clients go from a 490 to above a 630. I've seen clients go from a 580 to almost a 700 in a matter of a few months. But I will say, I'll put this disclaimer out there. You should not go into credit repair actively late on bills, right? If you know you're actively late on bills, you have to catch up. Reason being is every bit of work they do to make your credit better goes in the garbage when new lates and derogatory information hits your credit report, right? So that is the problem that I see with a lot of people, is that, you know, they're still late, right? So they come to me, they want to buy a house, but you're still late on your debt, or and you still having derogatory information hitting your account. So you got the car, you know, that might be hitting your account late every month. You got late payments on your credit card. And it doesn't matter how many collections they delete. If you're actively late on your financial obligations, then at that point, I always tell people first, let's get you caught up, right? And then let's get you into credit repair to clean up all of the damage that was done before you were caught up on your debt, right? Because that's why I'm seeing that the people who come out of credit repair quicker are people who have not been late or don't have any recent derogatory information. They're just kind of cleaning you up from what happened in the past, regardless of what the story is, regardless of what happened. They're just kind of cleaning you up. And that's what most people need to project them to the point where they can buy. But disclaimer, I just want people to know before y'all call, let's get your payments all straight and figured out first. Then we'll put you in credit repair so they can clean you up. And it should be a really quick turnaround time once you are at that place.
Thank you, Miss Tyleek. I got some little guests with me, so I'm trying to make sure they keep running in and out. But, all right, so we have talked to Tyleek. We have gotten our credit straight. We have our income. We have our pre-approval letter. Now it's time to actually go into home shopping.
Mm-hmm.
And usually what I like to do is once we get to that stage, I like to get a group chat together with myself, Tyleek, the client, and our assistant transaction coordinator, Sandy, right?
Mm-hmm.
And then that's when we start talking about, okay, what are you looking for in the house? How many bedrooms, bathrooms, square footage, what side of town, what style of home, what are your wants, what are your needs, right?
Right.
So we'll get in that group chat and we'll talk about it and we'll hash it out, and then we'll get a home search going.
Mm-hmm.
And with that home search is, we'll put in those parameters of what the people want. And I know everybody's looking for the perfect house, which 7 to 8 times out of 10 just doesn't exist. You gotta,
Mm-hmm.
You have to compromise on something.
Yeah.
But
Yeah.
once we get the home search, and what I like about you, Tyleek, is you'll send houses too.
Yeah, I'll
You
send houses too. If
but
I see something, I'm like, listen, you might like this. I'll put it in the group chat.
yeah, but so my search is based off of the MLS. So if another agent outside of Danville lists a home here, that's where Tyleek comes in and she'll see it, she'll catch it, sometimes quicker than I will. But we do have a home search set up for you, which will be emailed to you based off the parameters that I was given on the home. Now, again, when we work with clients who are out of town, maybe they aren't here to go out to look at the home physically. So we have a system set up to where if I get, hey David, I like this house. I'll go to the house. I'll shoot a video of the house and put it on our YouTube channel for the client to watch remotely. But I like to know what is a good day, what days and times are good for the client to meet with me, to go to the house to take a look at the property, right?
Mm-hmm.
Then after we find one that you like, we have to write a contract. And that contract will lay out the details of the purchase. So it's going to list out the home address. It's going to list out the purchase price. It's going to list out what you need to put down for earnest money, which is not a down payment, but it's just consideration that you're serious about purchasing the home, and you're letting the seller know that for me to take my home off the market and mark it under contract with you, I'm going to need something in return. Now, that money does come off of the backing end, and you usually have 5 days to submit it. And we have a wonderful title company that we work with here in Virginia, Virginia Title Center up in Roanoke. So shout out to Nicole and her team up there. But this process can get frustrating because sometimes you may not get a home delivered to your email inbox. And sometimes if you do, then there may be 5 other people who get that same house delivered to their inbox from their agent. So we have to move quick, which is why it's important to have that pre-approval up front, because when it is time to pounce or put an offer in on a home, we want to make sure we have the backing to do that from you and your company to be able to put the offer in, because anybody in the market right now, house shop, is a serious buyer.
Yeah.
We're not just looky-loos and hey, I want to go see 20 houses, because
Right.
your first 3 are going to go fast. The
Yeah.
last few I've seen, 7 days they're under contract.
Yeah.
So it's very important that we do our due diligence up front, because when it is time to put that offer in, we want to know we need to submit a strong offer.
And I will interject really quick and say
Please
this.
do.
So I have actually had this happen recently where a client where they saw the house they wanted first and then they came for the pre-approval.
Mhm.
But sometimes people's income situations are different. Like somebody like a truck driver, right? Where you aren't paid hourly, you're paid by load, right? Or trips. Those people with income like that, or like a nurse or somebody like that, or a traveling nurse, different people like that, where you aren't like the straight and narrow pay, where you get fluctuating pay, where you get shift differentials and things of that nature. Sometimes we have to order a verification of employment because the pay stub might not lay it out clear enough as to what you're receiving. So that changes you from being able to get a pre-approval the same day within hours to potentially having to get a pre-approval within 1 or 2 days. So that is something to consider as well. You want to definitely try to have a pre-approval before you find a house. Sometimes we can make it work where we can get that pre-approval to you where you can offer on it like that same day. But then you also have where I like this house at this price, but I have not thought about what the payment is going to be. Because one thing that we haven't touched on is those Zillow estimates are not accurate. What
Facts,
Zillow says
please
your home payment is going to be is not accurate.
say that
You're
again,
thinking a
please.
whole different thing. I mean, a Zillow has to be going off of like 2 or 3% interest, or either the principal and interest only. Something is wrong with Zillow's calculations, where they come to me and they're like, Zillow is telling them the payment for this $200,000 house is $800.
Mhm.
And you have to have that reality check with the client where it's like, of course you want to offer on the house, but you're going off the Zillow estimate that is hundreds and sometimes borderline $1,000 off from what it actually is, right?
Right.
So that is something that I did want to put out there for people. Is like those Zillow estimates are not accurate. We have to have a real conversation about your budget and
Mhm.
your financial situation too before you just like hop, skip, and leap into offering on a house. So those are the tough discussions that you have with me before you get to shopping. And it's better to do that over a course of a couple of days than to want a house and offer on that house that same day and all of it hit you at once on that one day when you're talking to me.
Right. Thank you. Um, so again, please just get with Talik first, because we don't want to put the cart before the horse, right?
Right.
And then we find a house that you like, and then you're not able to afford it, one, or it's too late. And then by the time we show up to the door, it's already under contract.
Right.
And then after we do go into contract, there are other due diligence steps that we got to take. We got to get home
Mhm.
inspections done, which will tell you any defects with the house. And that's an inspection done by a professional, and he looks from the roof to the foundation.
Mhm.
And let's just say if you're not in the city, you're out in the county, then you have to get the well inspected. You
Mhm.
got to get the water treated, the
Mhm.
water inspected to make sure there's no bacteria in the water. You got to get the
Right.
septic tank inspected and pumped if necessary.
And
So
also, if you get a manufactured home, we got to get a foundation and a structural engineering
we
inspection,
do.
which is something that I would order on my end just to make sure that the manufactured house is structurally sound. So, it's a lot of things that would have to be done that we
Mhm.
have to take care of before you can actually get into your house.
Right. And I'm bringing these things up because there are costs involved with this process, not just what I'm pre-approved for, $200,000, but there are upfront monies that have to be paid, which is your home inspection, which is going to
Right.
range between $300 to $400,
Mm-hmm.
depending on the size of the home. Your septic inspection is going to cost money.
Mm-hmm.
If you have to get the water treatment done,
Mm-hmm.
that costs money. To get termite inspections done, that costs money. Now, some of
Right.
these costs are on the seller,
Yeah.
but you have to have an appraisal
Yeah.
because we need to know what the house is valued at
Because you
before.
can't get a loan for more than what the house appraises for.
Right.
So at that point, that's a really big thing. I think we all kind of hold our breath until we get the appraisal back. You
Absolutely.
know, depending on the house, right? Or you might be a little concerned. But the appraisal is very, very important. That's that step right there that'll let you know, hey, sometimes the appraisers are so backed up and then
Hmm.
they go out to a house, they'll appraise it, they'll find things that need to be repaired. Do you know what happens after that? What do we have to do? We got to order another. You
Another
got to order
appraisal.
them to come back out after those repairs are complete. So all of these things can take some time, and have to be accounted for. So it's a lot of work that's done. Even though y'all see these closing day pictures, right? Y'all, it's a lot of work that goes on in the back end to get those clients there on both the realtor and the lender's part. So it's we do a lot, and we like to kind of get you as prepared as possible. So on my end, I really focus on budget and finance, and also like financial commitment to closing, right?
Hmm.
Because we actually just recently had an experience where the client was told they would come with one thing, then it changed to thousands and thousands of dollars more, then it became thousands and thousands of dollars more before that, with another lender before she was referred to me.
Right.
So I really try to have those numbers when you get going with me. I want you to have a full picture, and it really does not vary much by from the time you make your offer to the time we get into your house. I really try to stick as close to what I told you would bring as possible. Now, of course, rates go up, things change, before you lock it in, but we get very, very close. We are not gonna have you thinking you bring in $500 and then next thing you know telling you got to bring 15,000. That's just like how some people operate, and we can't do that.
We
So
can't.
we try to have you as prepared as possible. So I do think that is why our clients tend to lean on the more satisfied side when they reach their closing day, because they know we have stuck to our word. Whatever we said we were going to do, we were going to do. And whatever ways to help them that we said we were going to help them, we did it. And we stuck by that. And at that rate, and even when I give you like, the amount to ask for closing costs, some
Hmm.
lenders would just say plainly 5,000 or so, and that doesn't really cover everything. Then the client is like, didn't I ask the seller to pay all my closing? And I'm like, well, that was not all your closing right there
Right.
with the amount you asked for. So we try to have like a tight knit system that we run where it flows smooth, right? We don't have many surprises that come up, other than things that were completely out of our control anyway, because we try to really run a tight knit ship, and literally what we get them done. Like we don't have many people. Like we maybe have had one or two people that reached out to us that wanted a house
Right.
that did not buy yet, but are going
Right.
to buy. But almost every single person who has come to us to buy a house has gotten a house.
They have gotten a house, and sometimes they've gotten a house bringing less money to the table, right?
Yeah.
Than what than what was originally thought.
Yeah.
Now we got another question that came up. I love whoever this is. I don't know, but thank you. Do you have appraisers and inspectors to send, or do the buyers have to contact them?
So I will talk about the appraisal end because I ordered the appraisal. My processor orders the appraisal. So that is on the lender side. So the appraisal, I don't even know who the appraiser is when we order it, right? It is a discrete system because they want to make sure that we are not manipulating the value of the home and by a lender contacting the appraiser. So we don't find out until we get that report back. You don't find out. I don't find out until we get it back who the appraiser is, right? And their contact information and everything like that. So at that rate, you do not have to contact or call them. We order through an online portal, and they basically bid on doing the appraisal. They might make some changes. They might, ask for a little more if the house has like additional, structures. They might ask for a little more time to do the appraisal. So we might have a due date of, let's say, the 22nd, But the appraiser's like, hey, I can't get that done at that time. We might push it back out to the 25th. But we don't know until we get the report who the appraiser is. You know, the seller typically will know before I know, and before you know, or like the realtors may know because they have to reach out to schedule, you know, the appointment. But the client does not contact the appraiser.
And with the home inspector, I have two that I recommend. Now, as the buyer, as a client, you can choose whoever you want, but all
Mm-hmm.
home inspectors are not equal,
Yeah.
just like all appraisers are not equal.
Yeah.
Um, Now, the the home inspectors that I work with have been doing this 20 years plus, and they do 95% of home inspections for me, and I have never gotten a bad report from any client about my home inspector. What I usually hear is this guy was thorough, he
Mm-hmm.
was knowledgeable, he knew he was talking about, he took his time with us, because during the home inspection he'll call the client during the last 30 minutes just to do a walkthrough and let them know these are the issues that I saw. These are the issues that I saw that may not be a problem. Because I had a horrible experience. A home inspector told a client of mine that because a system was beyond its life, it needed to be replaced. And there was nothing wrong with it.
Mm-hmm.
And it cost a deal. But to answer your question, we have recommendations as far as the home inspectors are concerned. With the appraisal, that's on the lender to order. And like Talik said, she doesn't know who it's going to be, and the listing agent will know before I do.
Right.
After we do our inspections, and now we're waiting in the waiting game of, let's just say some conditions come up, and people may wonder, well, what is a condition? So can
Mm-hmm.
you go into what a condition is and some that we've seen and how to overcome those?
Okay. So when you come back to me, so after you are under contract, you reach that height where you like, yes, that house that I want, I'm under contract for. So then you come back to me, right? And I feel like I'm like, it's like people enjoy me for my personality. But I'll say underwriting is stressful, right? But I do navigate it with my clients to the best of my ability where they don't really feel that impact of the underwrite. But that is where we go. Because at this point, yes, I've gotten you pre-approved, but now we need to get you approved. So
Right.
final approval, clear to close, that's where we need to get you to. So when you come back to me, what I'll do is I will put the address in the application, and that makes your application complete. Your application is incomplete until you find a house and you're under contract for a house. So at this, most people at the pre-approval status have an incomplete loan application until they are under contract for a house. So once you're under contract for a house and we can attach you to a house, that's when I go in and I'll lock your interest rate in. That's when I will go double check your fees and make sure all of your fees work out. And I'll also make sure I find the right rate for you. So if you told me, hey, I only want to come out of pocket this much money, and the rate that you want is more expensive than that, then we will kind of negotiate to meet in the middle to find something where you are coming with an amount that you're okay with coming out of pocket with, before we go any further. So I get the rate locked. I go in and put all the details about the agents, the title company, the homeowners insurance, all of that stuff I kind of cover. Then I send out the loan estimate to the client. So at this point, when you sign that, you are agreeing to the terms of everything that I gave you for the loan. And you're saying, hey, let's get the ball rolling, because we can't get it rolling until you allow us to start the process of getting you the loan. So after I send it off to my processor, they do like a review of the file. They make sure it's set up correctly. They make sure no documents are missing before they send it to the underwriter. So the processor is like the middleman, and they will send it to the underwriter. That is the middleman between me and the underwriter, and you and the underwriter. Because at that point, I essentially switch positions. I become on the team with the client. And at that point, all I can do is get these conditions from the underwriter and help you satisfy them. So you get a conditional approval. So a lot of people hear conditional approval, they're like, yes, my loan is done. I am done. And I'm like, no, no, no. Conditional approval. So that means they're going to send you conditions you have to satisfy before you have a final approval. So that's what conditions are. So like a standard condition is going to be homeowners insurance. You have to have a homeowners insurance quote in order for us to close on your loan. Down payment assistance requires you to take a home buyer's education course. So that's typically a condition. Sourcing your earnest money deposit is a condition. So we need to see that earnest money deposit leaving your bank account. So we have to source it in order to apply it to your final balance and either give you a refund for that money, back at closing, or to just subtract what you paid from, your cash to close. So we have to source that EMD. And if you're using a 401k account, we have to get a 401k statement. We have to get, the terms of withdrawal from the 401k. These
Right.
are like standard conditions that most people have, but they are simple. If you are tech savvy, you can get those in like literally 24 hours. I do have people that are like less tech savvy. So I do have to hold your hand through getting some of these documents, but we do still get it done. But they are not hard. But we do a deep dive into your financial situation. And sometimes people are a little bit uncomfortable with that because you asking me what I'm spending my money on or what these deposits are in my account. So a lot of people do start to take it personal. And I tell people this is not personal. They're trying to give you $200,000 or $150,000 or $100,000 or $300,000 or $400,000. These are not small balances, so we have to do our due diligence to make sure that nothing is going to come back on us, and that you really are where you need to be approved. Like I'll give an example. So some programs, they don't allow you to own multiple homes, right? So when you get the USDA, typically you only want to have like one house for USDA, but they do allow you like, one house at a time, but they do allow you to have one, like if you inherited a house or something like that, and you don't have much financial obligation to that house, USDA will allow you to have that one house. But, if the client has more than one house that might have been passed down to them, then that can be like something that can completely shake up closing if they were not aware that they were on deeds for multiple homes. Because sometimes parents or grandparents will put you on something, you don't even know it. And that is something that can be a wrench thrown in that can completely change the trajectory of your underwrite or your approval. So, different things come up with different clients. And at that point, you just have to pivot, maneuver, and do what you need to do. But I'll say, like down payment assistance programs, they are on you way more about your finances because it's income based, right? So any of these crazy deposits you might be getting into your account, we have to ask about them because is this like a side gig that you didn't tell us about? Like, where is this coming from? Because this is a program for people who can't afford a down payment. And if you're getting all of these crazy deposits into your account that may be for other businesses that you did not report or disclose, then you might make too much for that program. USDA, Virginia State down payment assistance. That's kind of how it is. So that's really like the why we ask as many questions as we ask, or why the conditions may seem to be a little bit invasive. That's kind of where it's at. But we make it through that, and then after we satisfy all conditions, then we close. You're approved for final approval and clear to close.
And when we get to that final approval and clear to close, then everybody can kind of take a
Right?
one of those,
Deep breath.
because it's a stressful process, man.
Yes.
Even just looking for the house is stressful
Yeah.
because you want this and you want that and you want that and you want that, and it may have those first three and miss
Mhm.
that last one.
Yeah.
Is it still worth it?
Yeah.
To move forward with the purchase. And then let's just say we get through all of that and you decide I don't want the house anymore. There's some repercussions to doing that.
Yeah.
That may be another topic for another day, but
Yeah.
some legal repercussions that could go into that.
Yeah.
But I do want to say that this process, you do not have to walk through it alone.
Yeah.
Which is a lot of fear that a lot of people have. You have me, you have Talik,
And we
and
become like best friends, like you're talking to me
oh
and calling me like every single day
yeah,
for, I mean, upwards of maybe 20 days, 20. And then, if it's something where it's things going on outside of our control, yeah, I think the longest we won was like what, 45?
I think that's the longest.
Yeah.
Our
So
most recent one was what, 3 weeks?
yeah, it was like 2.5 weeks, and
Yeah,
then the
two and a
one
half, 3 weeks.
that we have going on is about 3 weeks too. So we don't really, we're in constant communication. So, and I can't imagine being a borrower and feeling like I've been left in the dust. And sometimes people do experience that, but that's why when you hire your real estate professionals, it's much more than those surface level things. Like it is
Mhm.
deeper than that. You want somebody like when I close, these people feel like family
Right.
and longtime friends, and you are so proud of them by the time they get there because you have gone through every emotion with them, the highs and the lows, the like, why do they need this? I don't know where this document is. I gotta find this document. We gotta find a way to figure this out. You go through those motions. I'll say we have had some that are easy, right? I won't say that everybody's is like stressful and super hard. Even the ones that are easy, they be like, y'all asked all this stuff. I'm glad I'm done. I'm like, dude, you got like 2 questions and like we were done in a
Yeah.
week and a half. But everybody
Yeah.
feels like it's invasive. But I'll say some people are just easy and some people are a little bit more complicated. But I'll tell you, we get it done every time.
We do.
Regardless.
And that's what we learn the most,
Yeah.
because it's gonna come up again.
Yeah.
The same situation or something even a little further down the line than that.
Yeah.
But I cannot tell you, Talik, how many days and nights I have just had to just stop somewhere, sit in my car, and
Hmm.
sometimes cry
Yeah.
because we do get attached to people,
Yeah.
and it's just not okay. Yep, I'm gonna help them buy a house, and then I ain't gonna see them no more.
Yeah.
No, they do become family.
Yeah.
I've sat at home in my driveway crying some days
Yeah.
just because, oh my God, I cannot believe this happened.
And then your heart sinks, right?
Yeah,
Especially
it does.
like our most recent situation, it was literally like just complete and utter, I feel like, misguidance that
Yeah,
they had. I feel like they were not I feel like they did not have the guidance that when we start with the client together,
yeah,
we feel like they are in a way better place. And at that, when I had to take over a loan from another lender, I just felt like the amount of stress you feel because you have to try to make it work. Like we already are under contract. They already have made all of these arrangements to go to this next house. We have to make it work. We have to figure it out. And it's an emotional roller coaster because in this career, one misstep on either of our parts and you could be homeless, right? So we
yeah,
take everything that we do seriously. This is not a Instagram or a Facebook thing, right? This is serious real life, and we go through every emotion with every client, and we
right.
get it. We get it done, right? We figure out solutions to problems, and we get it done. And that is something where I saw a post where this closing attorney made, where it's like every single closing in this market is it's a sacrifice on somebody's part. Everybody has to work from the buyer to the seller to the realtors to the lender to the title company to the homeowner's insurance agent. Everybody is working super hard to make sure things are affordable for clients, to make sure that everything goes smoothly, and you just have to make sure that you hire a team that feels that burden of responsibility to do the best they can for you at all times. And I feel like that is something that we do for our clients. And I do think that is why our clients are super satisfied
Yes.
when they leave. So I'm super grateful because I'm so glad that we met each other. I'm so glad that we work together. And like we said, this is deeper than what y'all see, online or, on our Facebook pages. We are friends in real life. Yeah.
Yes,
So, we are real friends because we go through things that are unimaginable that you can't even think of. And like, you can't help but to be close to people you work with in this industry to operate at your best. So, I'm just so super thankful for our relationship and working together, because I feel like now we have a system and we are able to kind of churn out these loans and churn out these home sales so effectively, so smoothly, because of the connection and the relationship we have built.
Yes. So we've been going for an hour and 15 minutes. So let's wrap up with
Yeah.
some to-dos and not to-dos.
Can I start with the
Yeah,
not to do's, please?
yes, let's just start with let's just talk what not to do while we're in this process of purchasing a home. And then if we get any more questions, great. And if not, I'll just have you reiterate how people can contact you. And then of course, I'm gonna send them your way either way. But what not to do when you're going through the home buying process?
Let me tell you, do not quit your job.
Come on, mama.
Do not quit your job.
Don't quit your job.
And as much as you would think some of these things are like, of course, don't quit my job. How am I gonna pay for this loan? Don't quit your job. Okay?
Yeah.
Just gonna put that out there. Don't quit your job without another job being lined up right there with it, okay? Because how are we gonna, because we re-verify before we give you this money. We go back and we call your job, we re-verify everything we verified at the beginning. And if anything changes, we got to take that final approval back because you're not working anymore or whatever, right? Next, this is a big one. Do not buy a car. Don't take out any new liabilities, right? Because that impacts your debt to income ratio. But a car is like a boulder to your pre-approval. Like that is a difference of $50,000 to $100,000 sometimes of your pre-approval. So if you go out and get a car before we finish everything, then now we have to add this payment in there. And these cars are expensive. I've seen $1,200 a month payments for a car. That's definitely something to think about.
For a car. And now, after they close on the house,
do whatever you want to do.
I'm not worried
about what you do after that. But you need to, you have to wait until you're done. Like, no anything. If you think that this might impact you, please call me. Before you do anything that might impact your ability to close, call me so we can get ahead of it. So I can tell you, no, don't do it. I've already told you, no, don't do it. But sometimes people need reminders, right? But those are like two of the biggest. Please do not do this. Also, don't take a long time to send in documents.
Right.
If we request something from you, you need to try your best to get it to me. I want it the same day. Of course, I'll give you a little leniency and to get it 48 hours, but you cannot not turn in things on time. And then when we get close to your closing day, be like, we're not closing on the 30th. Didn't we say we was closing? Okay, but didn't you turn in your documents 2 weeks late? So you just kind of pushed us back because you didn't turn your information in on time. So that is one. Those are probably the three biggest things that I'll say will kind of boom you.
Mm-hmm.
I'll also say if you're looking to get a pre-approval, don't pay late. Late payments are such a big factor in if you can or cannot get pre-approved.
Right.
So like a lot of the times you're at a 12-month window out from your late. So if you're late on your car this month, 2024 it is, November 2024 it is, right? So that's setting you out. We cannot have recent late. Sometimes they'll let them slide, but a lot of times they won't. So no recent late. And my last don't. Mm-hmm. So please, please, please don't dispute everything on your credit report as a method of fixing your credit, right? Because one thing that people don't know is that if you have over, depending on the loan program, $1,000 in dispute, now you're an automatic manual underwrite and a refer. You are not an automatic approval, which changes your terms of what you can get for your house. And I have seen someone dispute 20 plus items. And to get those items out of dispute, that costs money. I had to, it costs $200 to $500 per item to get these disputes removed sometimes. So people don't realize if all of your debts are in dispute, I have to now take that time to get these financial obligations out of dispute in order for you to even be pre-approved. So, real credit repair and not, putting a bandage on your situation, because disputing is not going to do anything for you other than hinder you in the long run. You can keep some things in dispute, but you cannot have $10,000+ in dispute. It has to be removed before you'll be able to get an automatic approval for your home.
I want to list one more before we end up, in the keep people out of your business.
Yeah.
Because advice can come one or two ways. You can get good advice, or you can get not so good advice.
Right.
And 9 times out of 10, you're going to get the not so good advice.
Right.
So lean on your mortgage, your real estate professionals. That is Tyleek, myself, and the other your home inspector, the appraisers, the people that do this every day.
Yeah.
Because sometimes you just got people who want to look out for you, but won't always give you the best or sound advice that you need at the time and make you miss out on a great opportunity.
Right.
I just want to throw that one in there.
Yeah. And I'll also say your grandma that purchased a house 50 years ago has great intentions for you. But when you hire us and you bring us on as advisors and people who are actively...
What happened? Her laptop died. I think Miss Tyleek's laptop has some issues. But what I'll say, which I think what she was getting at, is when you hire us on, we are in this every day, mostly all day, to lead and guide you to make the best sound decision, because this is probably the biggest, largest purchase and most important purchase of your life. And once you make this purchase, it doesn't just affect you now, but it affects your family later. When you get talking about generational wealth and having a home for your family, and when you pass on, who the home goes to. I mean, these things are important. And we know people usually do have your best interest at heart, but they can cause you to miss out on a great opportunity that, we just don't want to see happen. So I hope you all have enjoyed this presentation today. Thank you for sticking around to the end. I'll let Miss Tyleek know that you all greatly appreciate her. Again, my name is David Totten. I'm a licensed agent in Virginia and North Carolina. So if you're looking to buy on either side of the state line here, feel free to reach out, give me a call, shoot me a text, send me an email, or schedule a Zoom meeting with me. That link will be in this video once we end the stream today. I hope this was informative for you. If you have any questions, please reach out, let me know. If you see me out and about, say hello, and definitely look forward to helping you become the next homeowner of here in Virginia, North Carolina, that you've worked with David and Tyleek. God bless you. Take care. And we will see you the next time we decide to do another. I think we need to do these more often. And if you think so, just give us a thumbs up, leave us a comment in the video. and we want to make sure we help you get the keys to your next home and to your future. God bless you. Take care. Have a wonderful Saturday. If you're in Danville, the food truck rodeo downtown is happening today. And I just wanted to throw that announcement out there. So thank you. God bless.
They're waiting at the door.